I'm Nicole Killoran. I'm the director of the Vermont Small Business Law Center at Vermont Law and Graduate School. Whether a business owner needs to file an LLC or corporation really depends on the situation the business owner is in and what they're doing for business. So setting up a business entity with the Secretary of State means registering with the Secretary of State to say that someone is doing business under a certain name and that they are officially setting up a person to hold that business. That is what a business entity is. It's a person that can hold or sell or assign property. It can sign a contract. It can buy things. It can get credit. It can take a loan. It can take a grant. A business entity like an LLC or a corporation really does set up a fictional person that can do all these things. But registering with the Secretary of State also creates a limited liability shield. And that means that the business owner who files these documents and sets up this business entity, they have protection against the debts of the business. And that bears some explanation, because debts of the business means either loans or debts that the business itself has taken out, or it means responsibilities from somebody being injured or something happening in the course of business. So the important part there is that if an owner wants to maintain that liability shield, they need to make sure that any debts of the business are in the business's name. So for example, if someone's taking out a loan for their business, if the bank will allow them to, then they should try to take out the loan in the name of the business as opposed to signing personally as a guarantor. So that's often something that the banks do. They will say, sure, I'll give you this money, but you're going to either put your house up for collateral, business owner, or you're going to sign it as a personal guarantee. So that can create a debt that does not protect the owner. That creates a debt that is owed by both the business and the owner. So that can be a little risky for them too. Debts in the name of the business if possible, and also just watch out for hurting other people, because if a business owner hurts somebody else, in some circumstances they can be personally responsible for it. The example is, somebody who's out doing company business and they're driving the company car, but they happen to get into an accident and hit a school bus. They're still responsible for paying the damages for that because they're personally responsible for that mistake. There's a couple of different things too. There's tax benefits that can fall to either set. There's usually LLC is that's the default. That's what everybody thinks that they should file, and it's the simplest form of filing a business. That brings with it some default tax status, which is essentially pass-through. So an LLC would be a business owner who sets up an LLC. The business owner reports their income and the expenses for the business on their own personal tax return, because it's really as if the LLC and the owner are the same person. It's a pass-through entity. There's other ways to elect to tax the business income, though. They can elect with the IRS to tax as either an S or a C corp, which creates a different taxation structure. Those questions also can have to do with financial security. Those questions are best dealt with an accountant rather than a lawyer. Accountants are really going to be able to help a business owner figure out whether to set up an entity, which one to pick, and how to elect for tax status.